Hey fellow retiree, welcome back to our channel. Picture this. You're sipping coffee on a Mediterranean terrace, watching the sunrise over ancient cobblestone streets, knowing your retirement dollars stretch 3 times further here than back home. But then reality hits. Tax season is approaching, and you're staring at a maze of international banking regulations and tax obligations that could turn your dream retirement into a bureaucratic nightmare. And while financial planning is essential, many retirees also find peace of mind knowing their health, travel, and life risks are covered by the right insurance solutions. Having a safety net in place ensures your overseas dream isn't derailed by unexpected medical costs or emergencies. If you're planning to retire abroad or already living overseas, you're about to discover the financial landmines that catch most US and Canadian expat retirees completely off guard. Today, we're diving deep into the critical strategies that separate financially savvy overseas retirees from those who end up paying devastating penalties to multiple governments. The stakes couldn't be higher. One wrong move with your tax filing or banking setup could cost you thousands in penalties, freeze your accounts, or even jeopardize your legal status in your new country. But here's the thing. With the right knowledge and preparation, managing your finances as an overseas retiree can actually become simpler and more advantageous than staying home. Before we dive in, make sure to hit that like button, subscribe to the channel, and turn on the notification bell so you don't miss future strategies on making your overseas retirement stress-free. The banking reality check. Let's start with banking because this is where most people get their first shocking wake-up call. Your cozy relationship with your hometown bank is about to get very complicated. US and Canadian banks are increasingly closing accounts for overseas residents due to compliance costs, and opening new accounts abroad isn't as simple as walking into a branch with your passport. Here's what you need to know about maintaining your North American banking relationships. First, never assume your bank will keep your accounts open just because you've been a loyal customer for decades. Contact them directly and ask about their policy for overseas residents. Some banks will maintain your accounts if you keep a home country address on file. This could be a family member's address or a mail forwarding service. But here's where it gets tricky. Using a mail forwarding service or relative's address while living abroad full-time enters murky legal territory. You need to understand the difference between your legal residence and your mailing address for tax purposes. Both the IRS and the CRA look at where you actually live, not where your mail goes. For your overseas banking needs, research banks in your destination country that welcome expats. Some international banks specialize in expat services and understand the unique compliance requirements. Look for banks that offer multi-currency accounts, reasonable international transfer fees, and English-speaking customer service. Consider keeping accounts in both countries during your transition period. This gives you flexibility and ensures you have access to funds if one system experiences delays. However, remember that every foreign bank account with a balance over $10,000 at any point during the year must be reported to the U.S. Treasury or the Canada Revenue Agency. The tax obligations maze. Let's address the biggest surprise for many retirees abroad: taxes. Moving overseas doesn't free you from your US or Canadian tax obligations. As a US or Canadian citizen, you must still file annual tax returns no matter where you live or where your income comes from. But before you panic, understand that paying taxes and filing taxes are two different things. The US has several provisions that can significantly reduce or eliminate your actual tax burden while living abroad. The foreign earned income exclusion, for example, allows you to exclude a substantial amount of foreign earned income from U.S. taxation. Canada has its own sets of rules, including departure tax and worldwide income reporting, that retirees need to navigate carefully. For retirement income, different rules apply depending on the source. Social Security and Canada Pension Plan, CPP, Old Age Security OAS benefits generally follow you overseas to most countries, but the taxation gets complex. If those are your only income sources, you might not owe much in US or Canadian taxes. However, if you also have other retirement income like 401k distributions, IRAs, RRSP withdrawals, or private pensions, those combined with Social Security or CPP OAS could push you into taxable territory. Here's where strategic planning becomes crucial. The timing of retirement account withdrawals, the structure of your investment accounts, and even which country you choose for retirement can dramatically impact your tax burden. Some countries have tax treaties with the US or Canada that prevent double taxation while others don't. State and provincial taxes add another layer of complexity. Some U.S. states and Canadian provinces may continue claiming you as a resident for tax purposes even after you move abroad, especially if you maintain property, bank accounts, or other ties. Establishing clear residency before moving overseas can save you thousands annually. Foreign account reporting requirements. The reporting requirements for overseas financial accounts represent one of the most misunderstood aspects of expat taxation. The penalties for non-compliance are severe enough to wipe out years of retirement savings, yet many retirees remain completely unaware of these obligations. The Foreign Bank Account Report, FBR, in the U.S., and similar disclosure requirements under the CRA must be filed annually if your foreign accounts exceed $10,000 in aggregate at any point during the year. This includes checking accounts, savings accounts, investment accounts, and even accounts where you have signature authority but don't own the funds. Quick pause here. If you're finding this information valuable, go ahead and like this video and subscribe for more insights. We release new content every week to help you navigate overseas retirement with confidence. The threshold is surprisingly low and catches many retirees off guard. If you maintain emergency funds, investment accounts, and regular checking accounts in your new country, reaching this threshold happens quickly. The reporting deadline differs from your regular tax return, and the penalties for late filing can be catastrophic. Form 8938 in the US and Canada's Form T1135 for foreign income verification kick in at higher thresholds, but require more detailed information about your foreign assets. Once triggered, the reporting requirements are extensive. Here's a critical point many overlook. These reports are purely informational. Filing them doesn't necessarily mean you owe taxes on these accounts, but failing to file them can result in penalties that far exceed any taxes you might have owed. Strategic account management. Smart overseas retirees develop systematic approaches to managing their multi-country financial lives. This starts with understanding which accounts to keep where and how to structure your finances for maximum efficiency and compliance. Consider maintaining a US or Canada-based account for receiving Social Security, CPP, OAS pension payments, and other home country-sourced income. This simplifies your tax reporting and ensures reliable access to these funds. From this account, you can make periodic transfers to your overseas accounts for living expenses. For your overseas accounts, focus on practical needs rather than investment returns initially. You need accounts for daily expenses, emergency funds, and possibly local investment opportunities. Understand the local banking culture and requirements. Some countries require minimum balances, others charge monthly fees, and banking hours might be more limited than you're accustomed to. Investment accounts require special consideration. US-based retirement accounts like 401ks and IRAs, or Canadian accounts like RRSPs and TFSAs, can generally remain in your home country, but managing them from overseas presents challenges. Online access might be restricted and coordinating withdrawals becomes more complex with international wire transfers and currency conversions. Professional support and tools. The complexity of overseas retirement finances makes professional support not just helpful, but essential for most retirees. However, not all financial professionals understand the unique challenges of expat taxation and banking. When selecting a tax preparer, specifically seek one with expat experience. Regular domestic tax preparers often lack knowledge of foreign income exclusions, tax treaty provisions, and international reporting requirements in both the US and Canada. The cost of specialized preparation is typically offset by avoiding costly mistakes and maximizing available tax benefits. For banking and financial planning, look for advisors familiar with international transfers, currency hedging, and cross-border estate planning. Some financial institutions specialize in expat services and can provide integrated solutions for banking, investing, and financial planning. Technology tools can simplify ongoing management. International banking apps, currency conversion tools, and expense tracking software designed for expats help you maintain visibility into your finances across multiple countries and currencies. Document management becomes crucial when dealing with multiple tax authorities and banking systems. To recap, managing taxes and banking as a US or Canadian retiree abroad requires advanced planning, ongoing attention, and professional support. But it's absolutely manageable with the right approach. The key is understanding your obligations, establishing compliance systems, and maintaining organized records. Start your planning at least a year before your intended move. Research the tax treaty between your home country and your target destination, understand the local banking requirements, and establish relationships with qualified professionals. The upfront investment in proper planning pays dividends in reduced stress and financial efficiency throughout your retirement. Remember that your financial obligations don't end when you move abroad, they evolve. Stay informed about changing regulations in both countries, maintain meticulous records, and don't hesitate to seek professional guidance when facing complex decisions. Your dream retirement overseas is absolutely achievable with proper financial planning and compliance. Take the time to understand these requirements, implement proper systems, and enjoy the incredible opportunities that international retirement can provide. But don't leave your future to chance. The right insurance products, whether for health, travel, or long-term protection, can safeguard your lifestyle and your loved ones while you enjoy life abroad. Talk to a trusted advisor today about the insurance coverage designed specifically for expats, and make sure your retirement years stay worry-free no matter where in the world you choose to call home. Click the link below to explore tailored expat insurance solutions and secure your peace of mind today. And before you go, don't forget to like this video, subscribe, and hit the bell icon so you're the first to know when we publish more guides on making your retirement overseas both safe and rewarding.